Charlie Munger, Warren Buffett's partner at Berkshire Hathaway, doubled his own investment in Alibaba. And since a couple of weeks, analyst ratings coming out that Baba is a strong buy or a buy right now. If this is the case, and if you should invest in Alibaba with the ticker symbol BABA, Baba, I will explain in this video. Enjoy! First, I will talk a bit about the history. Don't worry, I make it short and just point out the important stuff. Then we have a look at the chart, followed by the fundamental analysis and what the pros and the cons to invest, or better not to invest in Alibaba are. You see, there is a lot of ground to cover, so I apologize already for the video's length. I will try to make it as short as possible, but I encourage you to watch the whole vid as all is important and to get the full picture here. So, Alibaba Group Holding Limited, also known as Alibaba, is a Chinese multinational technology company specializing in e-commerce, retail, internet and technology. Founded on the 28th of June 1999 in Hangzhou by Jack Ma and 18 of his friends. The CEO is Daniel Zhang and joined Taobao, which is an Alibaba subsidiary, in 2007, and in 2013 Zhang was promoted to Chief Operating Officer of Alibaba Group and eventually succeeded Jonathan Lu as the CEO in 2015. The company provides consumer-to-consumer C2C, business-to-customer B2C and business-to-business B2B sales service via web portals, as well as electronic payment services, shopping search engines and cloud computing services. It owns and operates a diverse portfolio of companies around the world in numerous business sectors. So you see, they offer a lot and is an absolute monster. On 19th of September 2014 was Alibaba's second initial public offering, IPO, on the New York Stock Exchange, as the first one was in 2007 at the Hong Kong Stock Exchange. But Alibaba was delisted in 2012 due to the aftermath of the financial crisis. Alibaba raised 25 billion in 2014, giving the company a market value of 231 billion and by far the largest IPO in the world's history. It is one of the top 10 most valuable corporations and is named the 31st largest public company in the world and the Forbes Global 2020 list. In January 2018, Alibaba became the second Asian company to break the 500 billion value mark after its competitor Tencent. As of 2020, Alibaba has the sixth highest global brand valuation. Alibaba is one of the most largest retailers and e-commerce companies. In 2020, it was also rated as the fifth largest artificial intelligence company. It is also one of the biggest venture capital firms and one of the biggest investment corporations in the world. The company hosts the largest B2B Alibaba.com, C2C Taobao and B2C Tmall marketplaces in the world. It has been expanding into the media industry as well, but it is impossible to list or tell you about each business they have, as they have tons of it, folks. So, now you know a bit of the history and what the company is doing, let's have a look at the current chart. Here we can see that in October 2020, the share price was almost $310 and fell since then. And I will explain later why the share price fell when I speak about the risks, to $111 last year November. And since then we can see a bullish uptrend up to $137.4 as of today. So let's have a look at the important numbers. The biggest competitors of Alibaba are Amazon, JD.com, and we can see that Alibaba has a long way to go if we compare it to Amazon, which means on the other side there is a lot room for growth here. Alibaba's market cap is $372.5 billion US dollars, and with the current PE ratio of 1937 and the PS ratio of 2.6 and a price to book ratio of 2.5. Compare this to Alibaba's 21 billion in annual profit, or even better to its 26.3 billion in annual free cash flow, and it soon becomes clear why Charlie Munger is investing or buying tons of shares of Alibaba. I give you a hint. Value investing, folks. Further, We can see that Alibaba's revenue is growing constantly, but here I will tell you already a con, because analysts forecast that Alibaba will not grow as fast anymore as in prior years, so keep that in mind. But how and with what Alibaba is actually making money? Let's have a look at the last Q3 earnings for it. There we can see that most of the revenue is generated by commerce or e-commerce, which increased 38%, followed by cloud computing and a small percentage with digital media and entertainment. Another metric I like to have a look always are who are the owners, means the percentage of institutions, retail investors and public companies and insiders. Here we can see that 38% of institutions holding Alibaba, and the biggest are SoftBank with 5.3 million shares and 24.9% ownership, followed by Tsai Joseph C with 1.3 million shares and 4.9% ownership. Public companies own 25% and insiders hold 3.4%. And last but not least, retail investors like you and me own 33.5%. And below you can see Amazon in comparison. But Björn, what does that mean? Well, with this kind of percentage of institutional investors, Baba is less volatile. Simple as that. But now to the important question. If all looks so good, why Baba was cut in half last year? To start, the company, like much of the rest of the Chinese technology sector, has found itself squarely on the wrong side of regulators as President Xi Jinping tightened his grip on the country's economy. The bad news started in April when Chinese regulators fined Alibaba with 2.8 billion for violations of the country's anti-monopoly laws and demanded that the companies undertake comprehensive rectifications of its business practices. Just 3 months later, China further demanded that Alibaba subsidiary Ant Group hand over its customers' data to the government for use in developing a new government-owned credit scoring system and further assist China in developing a state-backed cryptocurrency that would compete with or even eliminate Ant's own Alipay digital payments. Even more regulations on the use of customer data, Chinese Personal Information Protection Law, followed in August, and more fines in November last year. And as I said prior for Alibaba, there is also a bearish business case at play. In its last quarterly earnings, the company slashed its outlook for the fiscal year, revealing slowing growth and pinched margins. So you see, there are quite some risks. But let's come to the conclusion and my personal opinion and if I would buy or invest in Baba or not. As we saw, Baba is pretty cheap right now and they produce tons of cash. Hence, for a value investor, it would make totally sense to invest here. But on the contrary, we have the Chinese government, and just to be clear here, it is not a bashing. And a little fun fact about myself, I was living in China for 3 years in the Wudang Mountains, and feel free to laugh when you see the picture, to study martial arts. And yes, at that time I still had hairs. Hence, I have friends in China and I'm neutral here and try to see or look at it in the same way as an investor. But we have the risk of the Chinese government to interfere, and with most analysts warning that Alibaba will average only about 8% annual earnings growth over the next 5 years, it's possible the Chinese tech giant's best growth days are behind it. So, the analyst rating are the following for Baba right now. We have 24 ratings with 21 buy recommendations, 3 hold and 0 sells, with an price target of $140 minimum, 197 average, which would mean 43% upside and a max of $250. Given all that, plus I saw Xiaomi already because of the risk we have as an investor, but I still hold and will continue to hold BYD. If I would have the cash, I would invest and buy at the current levels in Baba, but with a clear exit strategy. Means buying now at $137 or below 140s, and as soon as Baba reaches $227 or $228, I would sell and cash out and take the profit. But that is how I would do it. But to sum it up, Baber is quite cheap right now and could be worth the risk. But that is something you have to decide as an investor if the chance of making profit outweighs the risk for you. And another important fact before I forget it, the next earnings release is beginning of February. So that could beat the analyst expectations, which means the price goes up even more, or they could miss it and share price would fall. Be aware of this. But please write me in the comment what you think about Baber and if you sold some shares or if you are going to buy or sell, as that would be quite interesting for me and for sure for others as well. And if you liked the video, please give me a thumbs up so that other retail investors like you and me have the chance to see this video as well, as the dang algorithm likes the stuff. And if you're on my channel for the first time, I would be happy if you would subscribe, because I regularly produce new videos and tutorials on the topics of stock analysis, investment and financial products to give you the opportunity to take your finances in your own hands. That being said, if you like the content and you want to support my channel with a few bucks so I can produce more videos, I will pin the link to my Patreon page in the comments below. That's it for today. Thanks for watching, and as always, stay focused and don't get greedy. See you next time.